Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. U.S. home builders just sent a pretty clear message about the housing market, and it's not what most people would think. There's something pretty alarming in the latest builder sentiment numbers, and if you look past what they're telling you initially, there's a pretty important story about buyer demand going on right now. Listen, before home prices move, before inventory shows up in the data, the folks that feel it the most initially are home builders. And they're telling you that buyers are not coming to the table. This is the National Association of Home Builders, Wells Fargo. It's always also called the Housing Market Index, HMI. For those of you that have been listening for a while, you know I like this one a lot. I cover it often. And what it does is it measures builder sentiment across the United States. Basically, what do home builders feel? What are they thinking? And what do they see down the line into the future? And it's measured on a scale from 0 to 100. The number 50 is neutral. Any value above 50 means builders are saying conditions are good. They're confident. And any number below 50 is saying that builders think conditions are poor and not adequate for home building. So it's not a price index. It's about confidence, about home builder confidence, and it's a demand indicator as well. And I'm going to explain to you why. First of all, why is the report so important? It's because it's a forward-looking indicator. Home builders are telling you what they're seeing now, but they're also telling you what they think is going to happen over the next 6 months. Always remember, home builders, they're right there. They're on the front line of the housing market. They see buyer traffic in real time. They know how many people are coming in to model homes, how many people are not. They know how often they're getting signed, how quickly the homes they're building are selling versus not selling. And they can see when buyers are coming and going and whether they're hesitating or whether they're walking away. So before we see any closed sales or home prices or inventory reports, builders are feeling it very early on in those early stages of development. All right. Let's take a look at the actual data. Now, keep in mind a couple of things. It breaks it down by, I'm going to start with the national numbers, but it does break it down by region. But let's just start with this. This is the April 2026 HMI number. It came in at 43. Okay, remember 50 is neutral. So anything below 50 indicates negative sentiment. So basically this is telling you that home builders are saying conditions are poor. They're not good. They're not horrible, but they are weak. 43, 50 is neutral. So let's look at each component. What I like about this is there's three core components to this report. Let's start with the current sales conditions, meaning how are things right now as far as selling homes that I've built? Well, it comes in at 49, so let's call it neutral. Maybe slightly below, but it's pretty neutral. How about sales expectations? How do they feel about the next 6 months? Number came in at 47, so they're not that confident in any near-term improvement. But they don't think that it's terrible, but it's just a little below neutral. Now, this is the one that stood out the most. This one really kind of jumps out on the page to me, and it's about buyer traffic. It measures how many buyers are actually showing up. The number came in at 29. I mean, that is indicating incredibly weak demand. It's essentially saying that buyers aren't showing up. This to me was the real signal in the report. Builders are basically telling us buyers aren't showing up. They're not coming in. Traffic is the weakest component. Demand is the issue. They're telling you loud and clear. So what type of behavior do home builders do or act like, right, when this type of thing goes on? Well, it tells you right here, 35% of home builders are cutting prices. And the average price reduction of homes is about 5 to 6%. What else are they doing? They're increasing incentives. They're doing rate buydowns to lower rates to make monthly payments more affordable. They're providing closing cost assistance, buyer rebates at closing, such as that, right? Basically, builders are trying to create their own demand. That's what that means. All right, what else? So it gets into each region. So let's look at each region. We'll look at the Northeast, the Midwest, the South, the West. Let's take a look at each one. Okay, in the Northeast, remember, 50's neutral. Northeast came in at 45. I'm just going to give you the overall breakdown. We're not going to get into each of the core components, but Northeast 45, came out the best. I'll tell you that. When you hear the rest of these, you'll think 45 is pretty good. The Midwest came in at 41. Right? Okay, the South, 44, and the West was the worst by far, 39, was the weakest region. I look at the Northeast, a little bit more resilient. You got some limited supply you can work with there. Look into the Midwest, kind of see softer demand. Definitely affordability pressure there. The South, by the way, is the largest housing region, so it's pretty important what the South gets as a reading at 44. Again, high insurance costs. We talk about the South a lot. Increasing supply going on there too. But the West being the weakest region, high prices, boom markets that just kind of trying to come back down to earth. But it goes to show you, every single one of them was below 50. So, the weakness is broad. It's not just this national number. No, it's weak everywhere. At least from a region perspective. Okay, it doesn't break down each individual city or metro, so I can't give you that from this. But let's look at another thing. I want to look at the trend analysis because I thought this was huge too. This jumped out at me too. Take a look at the last, let's do a 5-year context. Okay, 2021, the number was at 90. Remember, 50's neutral, 100 is the max, 90. Okay, in the 2021 peak when everybody wanted to buy a home and pay 3% interest rate to buy a home builders were feeling fantastic in 2021. And then 2022, as quickly as it rose, look at how it dropped. We went all the way down to the 30s. Just like that, because rates shot up, if you recall, so quickly, right? Rates went from, the 30-year fixed went from 3% to nearly almost 7-8%. And the demand just plummeted. So home builder confidence dropped all the way to from 90 to the 30s in just 1 year. 2023, 2024 numbers were in the 50s. So, there was confidence there, but it's been essentially, the point of this is that it's been rolling over since about mid-2025. And this is the lowest reading we've had since October of 2025. So the story isn't that the number is 43. It's the fact that we've been coming down from the mid-50s and plummeting ever since. So it's essentially telling you that there's this weakening demand trend and it continues to happen and the market continues to lose momentum. Okay? Now, again, no metro data, no city data. It's national and it's regional. But let's talk about this. What's going on? What's driving it? Well, mortgage rates, right? High rates, affordability stretched. Talk about this all the time. Buyers getting priced out. We're seeing so many data points that are telling us that this is an affordability problem, which then lessens demand. And we're seeing it again here in the latest data. Okay. Now, if buyers aren't showing up, well, there is less competition, right? So there should be some negotiating power there, and there's probably more opportunities. Depends on where you look. Listen to some past episodes to see where you should look. But again, as an investor, right, there is opportunity when you see something like this. When you see how builders are reacting, lowering prices, right, and providing incentives. But key takeaways, HMI 43, we're at negative sentiment from home builders. Buyer traffic 29, extremely weak. Builders cutting prices, they're offering incentives. The trend is down from the 2025 highs, which, by the way, weren't even that high. We haven't seen 50 in forever, right? We have not seen a score of 50 in forever. and we're seeing weakness, and it's broad across all regions. It's not just nationally, it's everywhere. And home builders are basically telling us something very, very important. If you listen carefully, buyer demand is extremely soft right now, and they're just not showing up. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at the Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free, get exclusive bonus episodes and content, and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it.